What is up, everybody? We have another September Top Ops Dissected. I just got done with Vegas for Traders for a Cause. It was so incredible to meet so many of you in person. I know we had people from around the world, everywhere from South America to Australia. So it was amazing, amazing, amazing to see the support and get to know that I'm helping all the people that I'm helping online to meet them in person. And many dumplings were had, and I think it's safe to say that nobody left that meal hungry. So absolute blast. I am still on the road, so this video will be a little bit on the shorter side, and yes, I am in a hotel room, but we're going to send it. Okay, let's kick it off. September 24 Top Ops. So in my opinion, September was one of the more difficult months so far, given how incredible this year was. I would say had it been a normal year, this kind of would have been a normal month, but this felt especially bad given just how active it had been. I think the best opportunity was SMCI by a long shot. There were decent opportunities though, and some other breaking news headlines. Like I do think it was a pretty news-focused month. And then right at the end of the month, we started to get the China gap on the Chinese stimulus, which then kicked off a very kind of crazy start to October. I will save some of the China stuff for the October review just because it's much better in the context of the overall move rather than cutting it off right at the end of the month. So nevertheless, let's dive back in. Okay, the first headline I want to go over is in ticker X on September 4th, 2024. So ticker X is US Steel, and this has been in merger talks with Nippon, which is a Japanese steel company. And this ticker has pretty much just been battered back and forth as far as whether this deal is actually going to close or not. And so that was kind of the big debate. And so then what we end up getting is a tweet slash article from Washington Post. And that was the scoop that Biden is preparing to block the Nippon Steel acquisition of ticker X. The way this works generally is it's not like Biden per se, but it is this group called CFIUS, which is this government committee to make sure that the country's best interests are not lost to overseas foreign interests. So for example, anything like defense stocks or semiconductors, or in this case steel, because the country needs a steady supply of steel and everything else to kind of build and all the other good stuff. Generally, a lot of these deals might come under the scope of CFIUS to be reviewed. And so essentially the Washington Post was saying that Biden and really CFIUS is getting close to blocking the deal. Like most breaking news headlines, you've got your short entry, and then we hold prior bar highs perfectly for a really, really, really long time. Actually, that's the beauty of the trade, and that's it. And so as I've said many, many times now, when we go over these breaking news headlines, it really is one of those things where like simple systems work very, very well. And so that's what we saw here. Okay, next what we're going to do is we're going to look at this LASE. So first, I'll kind of actually jump to the daily chart. And so what happened was this was a ticker that had kind of really, really run up a lot. This was very, very strong. We had gone from 350 all the way to 950. So this was a big move that trended and held prior bar lows on the daily for quite some time. That being said, like this didn't set up intraday for the short. We just really panicked sharply off the open. The reason why I want to go over this chart is because on this type of daily chart, this moving average, which is just the 20-day moving average, so often this becomes support in these panics. And so this went right to my sweet spot. We had an overextended, extremely strong stock that then panicked super, super quick in one leg right to that daily sweet spot. So because of that, that's what made me so incredibly interested in this. And like, no, this isn't like some crazy Chinese liquidation. It did run up a lot though. So you do want to be a little careful, but that daily chart, that's my sweet spot in this type of pattern. And that's really what I wanted to relay here. But then using the intraday, you still need an intraday setup, and we got that. This was classic right side of the V where we just melted off the open, then we break prior bar highs, and that's where you want to get in. So now here's the thing. Technically, we break prior bar lows at around $5. That being said, because this move is so damn big, and this had come up in a few questions before, because this move is so damn big and we're still so close to the lower end of this range, I actually don't want to probably sell there. In fact, if anything, you might still want to be buying more because we're so close to that bottom and this move is so big. You know, this stock was steady strong for days. Yes, overextended, but up to 950. And I just feel like hitting out below below $5 without giving this a chance to bounce is just too myopic and nearsighted. And the other thing too is this is kind of like just a bar post halt, right? Because there's actually a halt in here. So I'm not sure that that's like just this hasn't really yet had the opportunity to trade, and it's kind of just more arbitrary of the timing than, hey, this is failing to bounce. And I don't know where the perfect sale is. I mean, I'd still even feel marginally better about selling at 520 rather than 5. You know, once we find a range which is between 5 and 6, you know, as we consolidate, I'm probably just taking off in this consolidation. This one I did trade, and that's kind of what I did. Not that I got great prices, I got some here. Then you know, let's put this in perspective. Because I missed some of this move where I just wasn't paying attention that day, I was still buying some at 5. And you know, once we kind of failed to bounce in here and we're consolidating, that's where I'm starting to take off. Some I held the next day. Not really some crazy home run, but I do think this was a fairly easy intraday, and most importantly, wanted to emphasize that daily sweet spot. So now we've got the RYDE liquidation on September 12th, 2024. This is one of the Chinese liquidation bullshitty stocks, and this had run up from 8 to 24 or 22, excuse me. And then we had kind of one of those classic liquidations. The stock absolutely melts. Like again, we've gone over these Chinese liquidations enough that it's like you need to make your own decision whether you want to get involved on these short. Yes, there is, you know, some pretty big risk in these should you get squeezed and should this, you know, get you. So I don't want to speak for anyone. Like I personally don't necessarily think it's worth it, certainly for me. That being said, the opportunity wasn't on this big liquidation day, but the next day. And that's what we're going to jump to as far as the intraday. Most of these tend to lose like 90% of their value. And so that's kind of where we were trading the next day. And this is super beaten down. And so really we have this equilibrium range incredibly tight around $3 intraday. Then though, what ends up happening is we melt intraday and we get halted limit down. And then it's just pure liquidation. And we end up opening in the 70s. Buying that print, in my opinion, is nearly free money. The probability of this bouncing, I would say, is nearly, I don't know, nearly 100%. It's probably 95%. And the reward is so asymmetric. Like you can only lose so much to the downside. And when this has had an equilibrium of $3 for all day, you halt limit down, then you just get this stray print down there. I mean, look at this. This ended up bouncing over 75 cents. In fact, this ended up bouncing almost $1.50 at times. So when you consider that this is a 95% probability of a bounce, and the reward was potentially multiples of, even if this went to 0, which it's not going to do, like at a worst case, this probably settles into 50 cents or so. So actually, not that this was so liquid, but in terms of pure expected value, this is probably the second best trade of the whole month. Like I can't stress enough how epic those prints are. The only thing in my opinion that beats this probably is maybe the SMCI if you're getting first prints. You know, getting first prints to the Intel headlines or the SMCI headline is incredibly hard. This you can really game plan and plan out. So this to me is like, this is true A+ opportunity that many don't think about. And yeah, maybe you don't catch it all the way back to $2, but even if you catch it to $1.50, incredible opportunity that I think many people slept on. Okay, this Tupperware now on September 16th is going to take the easiest trade of the month. Like I think this was just kind of the easy money trade, probably even easier than Ride. We've seen this headline so many times. We've reviewed this so many times. Classic, short as early as you can, holds prior bar highs, a really good time. That is just textbook easy money. I know some of you guys have actually really started to capture some of this, which makes me proud. So good job. And you know, those that haven't, it's really worth studying this. And if it's not your game, you know, no big deal, but just worth being open-minded. Okay, now we've got Intel that same day on September 16th. And what we got right at the close pretty much was that Intel got a $3 billion chip deal from the government. Essentially, that's such a huge proportion of Intel's whole market cap. Anytime you see some type of award or a deal or a contract for an amount that's a large percentage of the market cap, you just want to buy the shit out of that. This almost reminds me of when Oracle got that contract from Elon's AI company earlier in the year, I think it was. Like anytime you see huge deal as a percent of market cap, you just buy the shit out of that thing. Intel's incredibly liquid. Same basic strategy. Simple systems work. This held prior bar lows perfectly, and that is a super liquid, amazing chop. I mean, this was a really good trade out there. So simple textbook, there we go. Now, the one danger trade I want to talk about is, of course, this Tenon, which squeezed on November 13th pre-market. This was a low float runner. Obviously, there were people thinking this is going to do an offering, and then it ends up just squeezing pre-market anyways. I really want to stress that, like, if you're still shorting some of this stuff, when you see all these happen, even if you weren't short this one, you really need to take this as a sign. Like, so many people are still calling these black swans. It's not a black swan when it happens once a month or once every 3 months or 4 months. Actually, just yesterday, we saw the ticker DRUG go crazy in October, and so many people are still blowing up in this stuff, and their excuse is, oh man, it's a black swan, I can't believe. It's not a black swan. By definition, a black swan, it's a risk that you don't know is out there. If you don't know that this risk is out there, like, that's on you, and I don't want to say you deserve to have your account blown up, but like, trading is a performance sport, and there's risks. And if you're burying your head in the sand, that's kind of on you. And so that is what kind of led to me to make this huge tweet on September 16th. Jesus. I think it's worth a read. Like, this came up in our last AMA. You cannot ignore these risks. If you're someone that just adds stubbornly in the low float stuff, that is how you blow up. I don't want to say names, but there is a very kind of public trader who's transparent, and he keeps on blowing up in this stuff. But you need a better system than that. You cannot ignore that these continue to happen and just keep on blowing up in stuff like, the Tenons, the drugs, the whatever. This stuff is happening and the risk is real. So if you haven't read over that tweet, it's worth it. If you haven't seen the last AMA, it discusses this topic in depth. You need to really adapt to these risks. These risks that were not previously there a decade ago are definitely there now. We've seen it time and time again. Now we're going to look at Intel. So this was another huge headline. This was on September 20th, 2024, and that was that Qualcomm approached Intel for a takeover. And this is the type of trade where, like, Intel's just so liquid. So you can buy the shit out of Intel. You can also potentially go into the options market. Like, some of those options exploded. And the truth is like, within this first 2-minute bar, it actually didn't go that far. I'd be very comfortable buying this as high as 2120 or 2130 or 2140. Even if you get 50-50 risk reward, it's really not coming back, with very high probability. And the odds of this at least getting another point like it did seems very high to me. So this was a big headline, simple systems, same deal. We don't need to catch the perfect high. And the other thing too is, of course, generally acquirers in this market have been going down. So you can also short Qualcomm. That is another trade option for you. Okay. The other biggest trade of the month, as I alluded to earlier, was SMCI on September 26th. And that was news of the DOJ investigation. As we all know, this previously had the short report alleging some funny accounting and everything. So now it comes out that the DOJ is indeed investigating SMCI for manipulating their accounting. The headline was only that it is in the early stages, so that isn't too worrisome. But nevertheless, if you can get early prints to that, I had this debate with one of my friends on Twitter, and he was saying, oh, this expected value wasn't as good as some of the other ops out there. Like, I would just strongly argue that if you can get anything, I don't know, 46 and above or 47 or even prints from flat, the expected value on this is so insane. The probability that this stock is going to melt is so high. In normal trading world, you do not get probabilities and expected values this high. It's at least going to go in your favor somewhat. As if you're really fast, there's no way that doesn't at least somewhat go in your favor. This headline is such a big deal and such a big catalyst for this name. Simple systems work. Prior bar highs, it holds, even through the halts. Like, if you're covering around, 40 or so, that is a monster chop. You just made 15 to 20%, which is amazing. And so that's a really good opportunity. It was very liquid. So this is Murder Town. In essence, I would say, like, some of the best opportunities of September were the breaking news. Whether we look at the Tupperware, whether we look at the Intel, whether we look at the SMCI, these were really big trades. Again, look, I'm just here to show you what's out there. I'm here to show you what's optimal. You do not need to do everything. You do not need to try to become a master of every playbook category, but there is a lot of good trades out there in this. And sometimes you don't need to be the fastest. Finally, there was the China gap at the end of the month. I am saving this because obviously it continued way into October. So otherwise it's just going to be totally out of context with the rest of the move. So it's better to have one cohesive discussion on it. So bear with me. We're going to have a lot of good stuff in October. We are getting very close to the launch of Magnum Opus. In October, I recorded the 100th plus video. So we're still on track for year end. As you all know, very exciting. Let's go. Looking forward to chatting in the AMA. If there's anything I can help you all with, reach out, and thank you for the support.